Ladies and gentlemen, good day and welcome to the United Breweries Limited Q1 FY22 earnings conference call hosted by Investec Capital Services. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harit Kapoor. Thank you and over to you, sir.
Yeah, thank you, Rio. On behalf of Investec Capital Services, would like to welcome you all this evening to the Q1 FY22 conference call for United Breweries Limited. From the senior management at United Breweries, we have with us Mr. Berend Oding, CFO, and Mr. P.A. Punacha, Finance and Investor Relations. At the outset, we'd like to thank the senior management for giving Investec Capital Services the opportunity to host this call. I'll now hand over the call to Berend for his opening remarks, post which we can open the floor for Q&A. Over to you, Berend.
Thank you, Harit, and thank you for hosting us. Good evening, everybody on the call. Thank you for joining today. I hope everybody is safe and healthy after what has been a very challenging quarter given the situation in the country. Today we'll discuss the quarter one results, and after some brief opening comments, Punacha and I will be happy to take any questions that there might be. Turning first to the results highlights. Q1 was again heavily impacted by the second wave of COVID-19. We continue to focus on safety while ensuring an agile approach on cost and investments considering the dynamic environment. Our volumes more than doubled versus prior year Q1, reflecting the different nature of the second wave related trade restrictions and healthy underlying company performance. Restrictions in the quarter were less stringent when compared to the similar period of the prior year, with almost all the markets partially functional in some form. However, our June 2021 volumes were at about half that of our volumes in June 2019. We realized a positive sales and price mix for the quarter. Combined with continued cost management and adaptation to new ways of working, the bottom line results turned positive with an EBITDA of 102 crores and a 9.1% EBITDA margin. Slide 5 shows the volume performance by region. In general, the growth figures differ by region and by state due to different impact and timing of the second COVID-19 wave and differences in markets opening up both this year and last year. North saw good trading, particularly in Rajasthan and Delhi. In West, we saw broad recovery in all the markets. East posted the highest growth. That's mainly due to a low base last year due to late opening of markets that time. In South, we saw broad recovery. Some markets opened relatively later or were fully closed, such as Kerala in the month of May. In summary, all major markets were partially closed during the first quarter, and into July, limitations in opening hours and, for example, weekend lockdowns continue in most of the markets. If we look at the net sales build-up, it was driven by 115% volume growth and 6% price mix. The next slide shows the EBITDA breakdown. Gross profit improvements were driven by better volume performance. Employee expenses lower by 1% despite the higher volumes. Other expenses have increased by 51% due to learnings from prior year, which led to better management of COVID-related disruptions and associated costs, continued cost savings, and partially offset by higher commercial investments. Finally, turning to the slide, outlook and summary. We have observed progressive recovery of underlying consumer demand post the first COVID-19 wave and see no reason why there should not be any structural changes post the second wave. Health and safety of employees and stakeholders remains paramount, while operations are fully in compliance with regulations as they are introduced from time to time. We are monitoring the changing environment on a continuous basis and will take appropriate actions for steering the business profitably by dynamically managing all elements of cost and investment. While the industry outlook continues to be volatile given the uncertain trajectory of the pandemic, the company continues to be optimistic about the long-term growth drivers of the industry and is committed to strengthen its market position. That concludes the opening comments, and let us move to the Q&A. Please go on.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Soman from Goldman Sachs. Please go ahead.
Hi, good evening. So 2 questions from my end. So firstly, can you give us a sense of how the reopen is progressing by region? I mean, you've given a sense of the performance, say up to June in your slide, but can you give us what's happening in July by region? And secondly, in terms of where you see July end up compared with July 19, any sort of commentary on that will also be extremely useful.
Thank you, Aditya. The situation of restrictions and lifting of lockdowns is, of course, very state-specific, sometimes even district-specific. But I think the broad theme we have seen is in June, the restrictions started being lifted. And, subsequent steps in July we have seen in most of the states. So, of course, some states went to full lockdown, some states went to partial opening, some states were less impacted at all. So that has been definitely differentiated and very different from prior year Q1. But I think the picture is today that we have seen, of course, retail, first of all, mostly come back, and on-trade on a staggered pace with still limited opening hours and limited seating capacity in most of the states. That's the picture broadly state by state. And towards July trading, we don't put out the figures, but definitely the picture is one that where we have seen last year recovery of the markets month by month, quarter by quarter. Again, this trend is very strongly visible today. At the same time, we all read the news. The trajectory of the pandemic is very difficult to make any estimates about, but at least where we are today, we do see recovery, and that's been manifesting itself in July.
No, I understand. That's clear. And in terms of sequential gross margins, we see a compression there now. Is this a function of sort of higher input costs, or was this just largely state mix and lower utilization?
Yeah, if you compare to last year Q1, we of course made an improvement. If you compare it sequentially to Q4, we are a bit lower on gross margin. It has to do partly also with state mix that we see, for example, a few states, for example, with cans being having a larger share in the total company result. So we expect that to normalize as the state mix and the recovery continues in months to come.
Also, some costs with respect to the failure of the reverse logistics on used bottles, because when we ended March last financial year, our used bottle returns had come back to almost normal. But this quarter again, with the pandemic hitting, the infusion of new bottles has gone up because of the used bottles return system having failed.
Thank you. No, that's very clear. Thanks. That's it from my end.
Thank you. Participants who wish to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. My first question is from your presentation. You have said June sales were half of June 2019, 2 years back. So I wanted to understand this number. So would you be a bit disappointed given pent-up demand would have been there, and in-home consumption has also taken some shift in favor of from pubs and bars? Pubs and bars will be 25% of the sales, but why should the sales be half of June 2019? Because in most other sectors in consumption, we have seen pent-up demand of the law of May coming out in June. So that is not visible in your case.
I think one has to recognize that even in June there were a lot of restrictions. So most of the opening of the trade, for example, some of the on-trade that in certain states continued to be closed for the full month. Other states had on-trade opening towards maybe the 21st of June, so only a small part of the month. And even in retail, we saw restrictions on opening hours. So, for example, if the opening hours are only from 9 to 3 or 9 to 1, given that beer is, of course, a product that needs to be chilled and is usually consumed towards the end of the day. I mean, that's not, supporting immediate good recovery. But having said that, as we have seen in July, further opening of trade and restrictions continue to be lifted. Yeah, we're hopeful that recovery will continue on a good pace.
Sure. My second question is, in some of the states like Bengal and Rajasthan, there has been favorable regulatory action for beer industry versus the spirit. So if you could elaborate on those two states and any other states you can get this benefit, why should it be restricted to only two states?
Yeah, in those two states we have seen indeed, we discussed on earlier calls, favorable regulatory changes. With that we have also seen very good trading. I would say in the case of Rajasthan, it's probably a little bit early to really conclude, as we need a couple of months, I would say, to really get a picture which is not impacted by restrictions on opening hours to get the full visibility. But at the same time, to the second part of your question, the states, each of them make their own decision as to what the policies are going forward. So it's good to know that a couple of these policies are moving in the right direction, but this discussion remains very much a state-by-state discussion and policy. But definitely we're using those examples with other states as to what future policy could look like and what could be the what we think are the win-wins for all the industry participants. But it's too early to comment as other states move and by when, etc. That's not in our hands.
Just to add, even Uttar Pradesh, there was a duty reduction effective April 1st. You have not taken note of that. So, in addition to West Bengal and Rajasthan, in UP also there was a duty reduction and subsequent drop in MRP, which is leading to a buoyant market in UP also.
Okay, thanks for that info. But do you see any risk that these three markets could reverse because we know how state governments operate? So when they see good volumes coming back, they become quite greedy to increase the taxes again. So is there some risk, or do you see this financial year that risk is low? Based on your understanding, we can't predict how state governments operate.
Yeah, I think what I can see is the states made a conscious call to move in this direction. Of course, you never can rule out some of this might be changed in due course. But I would also refer to last year when we had many states introducing kind of COVID type taxation, which was quite large in a number of the states. I think all of those examples showed that those kind of big duty increases did not really work and were rolled back fully or sometimes partially in subsequent months. So I think this has also shown many of the states that you have to be with a long-term approach with careful rationale in terms of your excise policies. So I think all those learnings hopefully will bear fruit in the years to come.
Sure. And one last one. So on Delhi liquor policy, any comments? What will be the changes? What will be the benefits?
Yeah, I think in general it's going to be good for consumers in the sense that increased opening hours, reduction of the legal drinking age, moving much more of the trade, in fact all of it to private hands. So I think that's a move towards consumer choice, and that's something we certainly support. So we're hopeful that it brings a new growth impetus to the Delhi market, and with that, we fully support it.
In addition to that, in Delhi, the rule also says that the manufacturer of beer can no longer have their depot in Delhi because there is no manufacturing facility in Delhi. So as such, today the manufacturer needs to have their depot. So going forward, those depots will have to go. So the smaller players in the immediate will be in some sort of a thing. So the major players will tend to gain with this new Delhi policy.
And your depot will be where? In the UP? How do you supply?
In Delhi. No, all manufacturers cannot have manufacturing facilities in the vicinity of Delhi. It has to be outside Delhi. So the rule now says that you have to have a manufacturer owning a depot location inside Delhi. So your production facility builds the depot from which you sell to the Delhi market. So going forward, the manufacturer cannot have this depot facility. So it has to be a large distributor who has previous financial strength and track record. So in the immediate future, the large players will tend to gain because the smaller players will not be able to identify a strong party to do their distribution.
Sure, that's very helpful. That's all from me. Thanks, sir.
Thank you. The next question is from the line of Asit Desai from MK Global. Please go ahead.
Yeah, hi, Beren, Punacha. Thanks for the opportunity. Just two questions. We've seen a lot of cost savings from you over the last 2 quarters. So when we look at the overhead cost line item, could you help us understand how much of these are structural in nature, and if you could split that into the major costs where you've seen a lot of savings, that will be helpful.
Yes, you're right. We have been running a, let's say, comprehensive cost savings program since the start of pandemic. This is actually continuing. All of those savings are of a structural nature, but at the same time, we've always said we don't put out one figure what is moving to the bottom line, as we always, have to also take into account other types of inflation that come from time to time in the different cost items. Secondly, we also decide to reinvest part of that into commercial activities, whether it's in the top line or in the A&P spend. So those elements will be there from time to time. But definitely the cost savings that we have done are of a structural nature, and we continue that program to reach further efficiencies. And as we said, we dynamically look at costs in the sense that we have seen, of course, a very volatile top line, and with that we aim to manage also the cost elements in that spirit.
Okay, and is there a target which you'll work on internally to save costs every year, like some other companies do?
Yeah, we have a program where we have a rolling forecast of what are all the initiatives, what is the pipeline, what is the realization. And of course, when we identify those initiatives, we have in mind a certain absolute figure, which can also be fully moved to the bottom line. Let's say, depending on where other costs move, what is the competitiveness in the market. But that's how we operate. But again, we don't put one figure out there because I think that might be partially misleading if we decide to reinvest some of that in behind brands or behind innovations, then it might give the wrong signal, I think, if we talk about those numbers. But rest assured that on all the main cost items we have those programs running, and we will continue to identify new initiatives and move those along going forward as well.
Got it. And lastly, with Heineken increasing stake and you becoming a subsidiary of Heineken, do we see any changes in operations or more collaboration or some synergies, cost efficiencies due to that?
Yeah, I think we'll of course explore in the coming months as to where we'll closely or further seek cooperation with Heineken. I don't expect huge changes in how we operate or what we do. But of course, Heineken has been a long-term shareholder in the business, has been a long time represented on the board. Of course, we have the brands full cooperation. But yeah, of course, we can always take next steps and the further levels of cooperation. So that is something we'll definitely explore. But if you ask me, is there immediately going to be a huge change? I don't think so. But again, we're happy with that kind of confidence Heineken has in the business, sees in the beer market the potential for India, and we will work together to unlock that further growth potential.
Okay. Thanks. That's it from me. All the best to you guys.
Thank you. The next question is from the line of Alok Shah from Ambit Capital. Please go ahead. Mr. Alok Shah from Ambit Capital, you may go ahead with the question. There seems to be no response from the line of Mr. Alok Shah. We'll move to the next question. The next question is from the line of Arnab Mitra from Credit Suisse. Please go ahead.
Yeah, hi, good evening. My first question was on input costs. So if you could give us some sense of the outlook on barley prices that you see for this year, and also do you anticipate increases in glass prices given the inflation that we have seen in crude oil and gas prices? So some outlook on both these commodities if you could share with us.
Yes, on barley, the picture is still similar as we have been discussing in the last call. So barley prices have moved up by around 15% this crop versus last year crop. Both the quantity and the quality this year round is a little bit below normal than what we would see in prior years. On glass, we see more or less stable input prices there. Much of course will depend on the collections that we get back out of the markets. But all in all, I think for input cost, the picture is similar as we said in last call, that we look at kind of mid-single digits in terms of on a per case basis the input cost inflation.
And in terms of possibly mitigating the cost pressure, is there some pricing you have from some of the states that you've got versus last year? And also, if you look at it versus FY20, which was actually a relatively tough year for input costs also, is the margin scenario tougher than what it was pre-pandemic?
So on the pricing, we have taken some price increases in some of the states, in smaller increases in Maharashtra and Karnataka, a few of the other states, but I would say probably this is more about volume recovery versus straight out pricing. I think that's a bit different maybe than traditional years. I think really the emphasis is on moving the volumes back to pre-COVID levels versus straight out price increases. And on the margin side, yeah, of course we have mitigating cost measures in place. So we look at increasing the recollection, we look at the type of bottles we use, we look at consumer value engineering approaches on some of the input materials, and we hope that will in part mitigate some of this cost increases.
Sure. And one last question from me: any CapEx plans now for the next 1 or 2 years, given that volumes have now come down? But if you anticipate a recovery, are you going to restart your CapEx this year, or would you give it a bit of a pause to see how the volumes come back?
Yeah, it will be more the latter. It's a bit of a pause. So we have completed a couple of programs that were initiated pre-COVID periods. Those are all finalized. Those have been completed. So we will do the normal kind of statutory safety, compliance-related replacement type of CapEx programs. So the guidance we put out last time was around 250 crore for this year, but that includes not really any expansion because we have ample capacity at the moment. At the same time, there will be some lead time, of course, when things pick up, and we would look at volume growth from pre-COVID levels. But yeah, that's not yet on the table today.
Okay, thanks so much. All the best.
Thank you. The next question is from the line of Jaykumar Doshi from Kotak. Please go ahead. Seem to have lost the line from Mr. Doshi. We move to the next question. The next question is from Vishal Punmiya from Nirmal Bang Institutional Equities. Please go ahead.
Yeah, thank you. Thank you for the opportunity. So I have three questions. Firstly, on the realization as well as the price mix during the quarter. So if I see the volume growth and then obviously minus it from the beer sales growth, the realization or the mix growth is actually negative. What has led to that negative growth, which has been positive over the last many quarters? Second question is on the premium brands. If you can update in terms of how has been the overall performance versus the overall portfolio of the premium brands during the quarter, and any update on the wheat beer scale-up as well as performance during the quarter. And lastly, also if you can give some highlight on the advertisement spend during the quarter. There was a sporting event during the quarter. So how did that pan out on a YY basis, and how do we see this spend on a full year basis? Thank you.
Yeah, coming to your mix, I think this unusual quarter and unusual year has seen the high realization markets seeing more restrictions than the others. So that has resulted in an unfavorable mix. And with things normalizing, the sales mix should go positive, and the more profitable markets which were subdued now should bounce back, and you should see a favorable sales mix. And your second question was on super premium brands. Yes, there was a pressure in the quarter because even now the complete opening up of the places of consumption has not been complete. I mean, there have been a lot of so as such, super premium brands are consumed in these locations where currently we are finding these restrictions not fully gone. And coming to your last A&SP, yes, there were subsequent spends on the IPL, which has been shelved now because the event has been shifted to April. So wherever the buzz for the brand is needed, we are ensuring that that has been taken care of. We are using digital media and other methods to reach out to the consumer. So the buzz needed for the brand is in place. So we should find positive results in the coming quarters.
Just couple of drops. Firstly, in terms of price increase, what would be the weighted average price increase that will flow through in the next quarter? And also an update on the wheat beer scale-up and performance. Thank you.
Yeah. Wheat beer scale-up will be done as and when things normalize. We had started scaling up wheat beer, but then with the pandemic, we had to pull back. It will be done in a phased manner as and when things open up and normalize. We have taken price increases in Rajasthan, in Punjab, in Assam, in Kerala, in Karnataka, Maharashtra, and Chhattisgarh. And as and when the mix normalizes, you will see improvements.
Yeah, but would you like to quantify the weighted average increase for the company?
Can't quantify that. Start multiplying each location's largest SKU with the mix and then give you something which is a projection, which I think is difficult to achieve right now.
Okay. Sure. Thank you. Thank you for answering the question.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Alok Shah from Ambit Capital. Please go ahead. Mr. Alok Shah from Ambit Capital.
Hello. Hello.
Yes.
Am I audible?
Yes, sir.
Okay. So my first question is on CapEx. While you partially elaborated that this time there's not going to be a big CapEx, but just wanted to get a sense as to what would be a typical cost for a greenfield brewery that you set up, and that should typically include premium plus your regular range of beer. So what is that ballpark number?
The brewery including land might be really depending on the location, on the size, on the state itself, but you easily talk about numbers like 250, 300 crores, I would say.
Okay, and just to confirm, you are saying that the earliest that you will possibly look at a greenfield is sometime around FY23 and not before that, right?
No, we have not spoken anything about a greenfield. No, we're talking about new investment. I mean, greenfield is setting up a new brewery. I mean, we have breweries across almost all states where we need to have.
Correct.
So, as such, there's no tearing hurry to open up a greenfield. When the CFO said that there will be new investments after 2023, it's new investments in expanding capacity, because the current investment is for replacement and upgradation only, considering that we have sufficient capacity to meet the current demand till 23. That's what he meant. He didn't mean that new investment means a new greenfield.
Got it. Okay. Thank you very much. And Punita, I just wanted to clarify on the depot thing that you said. So basically, you are saying that now you do not require a depot, but all the beer companies will have to rely on a large distributor in order to penetrate well in the
Yes.
new retail landscape in Delhi. Is that understanding correct?
Your understanding is correct. And most large players have depots which are currently being managed by these large distributors. So as such, they have an ongoing relationship. So what would happen is the large players would ensure that this billing happens to this current distributor who's managing the depot, and the business will run seamlessly. But the smaller players who have their own depots now, which they are managing themselves, may be left in the lurch because there'll be a difficult time for them to find a distributor in a hurry.
Got it. And very quickly, if I can just squeeze in one more, I just wanted your quick remarks on the related party transactions. Of course, it's a small amount, but things like technical service paid or royalty paid. So if you can share, the rates or for the same, or how does the transaction work?
For the Heineken brand, we are paying 7% royalty, and for the Amstel brand, we are paying 5% royalty. These are as per income tax transfer pricing rules, and it is perfectly in sync with what is done across the world.
In the related party?
Yes.
No, I'm saying the purchase and sale transactions within the related party would essentially pertain to what?
Talking about purchase and sales.
Yeah, no. So first was on the technical service and the royalty, and the second part was on the purchase and sales that we see in the related party. If you can just explain on that.
Yeah, I mean, if we are purchasing something from Heineken has a rack rate which is as per international transfer pricing rules, and it is no different whether it is sold to UBL in India or to any other of their opcos across the globe. So that way, we are completely compliant with related party transactions in all statutes.
So some components will be brands owned by Heineken where we pay a royalty. Some components is where we import brands, for example, finished product food like Heineken 00, so that we buy and import. And another component can be technical assistance or know-how fees, which are also quite typical.
Okay, got it. Just because
Sorry, I didn't get your last question.
No. So I was saying because the absolute amounts were going up year after year, so I thought I'll just clarify on the transaction space.
Yeah, because the number of transactions is going up. Royalty is going up, the volume is going up, so the amount is up.
No, fair. Sure. Thank you.
Okay.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. The next question is from Jaykumar Doshi from Kotak. Please go ahead.
Yeah. Hi. Good evening. A part of my question was already answered earlier. Just a quick one, a follow-up. So you mentioned about roughly mid-single digit increase in input costs based on where barley prices are current are as of now, and you don't see any material inflation in grass prices. My question is, has this inflation already reflected in the 1Q FY22 results, or will we see incremental input cost pressure over the next 1 or 2 quarters?
So no, this guidance is for the full year, including Q1. I think behind your question is, of course, barley. That will take a bit more time to flow through the full P&L. On the other hand, we also see a couple of other commodities where we saw earlier inflation, for example, on carton or secondary packaging that will flow that's already more built into the current pricing. So in that sense, the guidance is composited of all those input cost materials.
Understood. And second is around the price increases that in a few states, including Karnataka, Maharashtra, Rajasthan, Punjab, Kerala. Has this reflected in the current quarter, or will we see full benefit of those price increases over the next 1 or 2 quarters as state mix and product mix normalizes?
Yeah, I mean, partially they have been, because some have come in April, some have come in May, some have come in June. But all these states have had some effect in the first quarter already. You'll see the complete effect in the second quarter onwards.
Understood. So as you sort of move towards a normalized environment and state mix, reasonable to expect that gross margins should go back to 51-52% levels from the current quarter's 48%?
If the mix remains as it was as of March, achieving March quarter's margin percentage with these price increases should be achievable.
Thank you very much. Very clear, and good luck for the next quarter.
Thank you. Ladies and gentlemen, please press star and 1 to join the question queue. Participants who wish to ask questions may press star and 1. The next question is from the line of Mr. Harit Kapoor from Investec. Please go ahead.
Yeah, hi. Just a couple from my end. Firstly, just wanted to get your sense on the movement in balance sheet from net cash to net debt. This is largely led by higher working capital towards the end of the year, or a little bit of capex, which you spoke about, which has been done in the first quarter. You had lower cash flow from operations this time. So just wanted to get your sense on what those movements entail.
Yeah, we should be comfortable because I mean, if you see the start of the quarter, we started with a huge opening cash balance, and we also had a high working capital blockage constraint. The March quarter had a 9% volume growth, so you had a high level of debtors. So all that will be liquidated as we move on and go into the off season. So cash flow wise, we should be comfortable as we speak. And as the CFO already mentioned, we will be cautious with respect to our capex, considering that the capex will be limited to replacement and not for expanding the capacity, considering we have capacity for current volume levels. So we should be comfortable as we speak.
Got it. The other question was, regarding new product innovation. I mean, you had looked at the beer. I think this is initial phases of the launch.
So very feeble, Harit. It was very feeble. I mean, we have to. At least I have to strain my ear to hear you.
Yeah, can you hear me now? Is this better?
It's better.
Yeah. So my question was really regarding the innovation pipeline. So, once things do see a little bit of normalcy, do you expect, a higher rate of new product launches, given the market was just not conducive, to roll out wheat beer or any other new, agendas that we're planning for the last 15, 16 months. So is that a better way to look at it, that you could see more new things from United Breweries stable, once you see signs of normalcy kind of setting in?
Yes, you're right that, of course, with the current trading environment, it was not really conducive to launch brands or expand them. We do have plans that we had to suspend given the second wave. So on wheat beer, on some of the other brands, we still have more states and more expansion to go. So that's something we'll definitely pick up. And certainly, as we always said, I mean, the development of the beer market in India is, I think, still early days. So much more will happen, particularly on the premium end. And that's what we're, of course, gearing up for. And if anything, the number of innovations and launches will increase with that development. So I think that's very positive that the market continues to evolve. Consumers continue to experiment and look for varieties. So that's all making the beer market more excited, and particularly on the value and the premium end. So that's positive.
Great. Those are my two questions. Ray, we can go back to the queue. Thanks.
Thank you. The next question is from the line of Ashit Desai from Emkay Global Financial Services. Please go ahead.
Yeah, hi. Just to follow up, in Delhi, you talked about the changes in policy. If you could give us a sense how large is this market, and also what's the share of smaller players in this? So if you remove the top three players, what's the share that the small players enjoy over there?
Smaller players is around 15%, and Delhi salience for the country is approximately 3.5-4%.
Okay. And lastly, last year you all had some provisions after the lockdowns, due to the lockdown. Are there any provisions in this quarter?
No, the provisions are on a very low level, so there's nothing in terms of one-offs that's really impacting the profit and loss this quarter.
And looking at the inventory at depots and your plants, is it fair to assume that there will not be much provisions going ahead also?
No, the expectation is that I would say the worst is behind us in terms of markets being under lockdown. Of course, with the experience from last year, the different nature of the lockdown and the weeks leading up to the lockdown, then we were able to anticipate a couple of these dynamics. So where we stand today, we do not see any particular risk on stocks, whether it's in the market, the breweries, etc.
Got it. Thanks.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone telephone. Ladies and gentlemen, to ask a question, you may press star and 1. Well, as there are no further questions, I'd like to hand the conference back to Mr. Harit Kapoor for closing comments.
Yeah, thanks, Joe. Once again, on behalf of Investor Capital, we would like to thank all the participants who joined on this call, as well as would like to thank the management team at United Breweries. Would also now like to hand over to Berin for any closing comments. Berin, over to you.
Yeah, thank you everybody for your interest today, and thank you, Harit, for hosting the call. And I think we can conclude and look forward to be in touch with everybody in the next few months, or otherwise in the next quarter call.
Thank you very much. On behalf of Investor Capital Services, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.